How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of this video. Go click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. I'm going to also send you a Webull tutorial video to walk you through how to use the Webull app to make your first trade. All you got to do is just send me an email and let me know that you've opened the Webull account, that you funded the Webull account, and then I'm going to send you that free tutorial video to kind of walk you through the basic steps, how to use the app so that you can start buying some paper assets if that's what you want to do. Email address down in the description box of this video. So hit me up. Let me know you've opened that Webull account. In today's video, guys, I want to cover my concern about the stock market in 2024. I've been reading quite a bit of information from these experts. And on one side of the aisle, you got experts that say there could be a stock market crash in 2024. On this side of the aisle, you got another group of experts that say, no, there won't be a stock market crash. So I'm in the middle here thinking, okay, who do I listen to? If I listen to these guys over here that are saying they're going to be a crash, I got 75% of my wealth in the stock market. That's a bit scary, even for a guy like me who has been doing this for 25 years. It's a bit scary. If I listen to these guys over here, they're saying it's going to be a banner year. Potentially the start of a new bull market. So what do? I'm all in. 75% of my nest egg is in the stock market. Do I take a chance, roll the dice in 24? Or do I divest, liquidate, move it all to something that will protect the principal? That's what I've been thinking to myself. And I said, what's happened in 2023? Now we know 2022 was not a great year for the stock market. It was a negative year. But what happened in 2023 to the stock market? Before I answer that question, of course, it's just my opinion, guys. You have to go out and do your own research, do your own homework, come up with your own conclusion, because I'm not a financial advisor. I'm not an expert on the stock market. I'm just a guy on YouTube who has been investing in the stock market on his own for 25 years. And I built a level of wealth. So I believe on my YouTube channel, I have an opinion based on that 25 years worth of investing on my own. See, I can speak on my experience through my opinion, right? And that's all I'm doing here. You don't have to agree with it. I'm just giving you the things that are going through my filter system as I get ready to turn this corner and look straight ahead at 2024, and I got 75% of my net worth in the stock market. Here's what I'm thinking. I'm saying to myself, let's go back and look at 2023. What happened to the stock market in 2023? Well, let's take the S&P 500, because most folks will agree the S&P 500 is sort of like the broader stock market, right? It represents the top 500 companies in America. All big boy companies, but in every industry, every sector. So that's the broader stock market. So most people, when they look at the stock market, they take a look at the S&P, and that gives them some indication how the stock market is doing. Again, that's not everybody, but most folks, most experts will look at the S&P. So what did the S&P do through November 2023? It returned an 18% ROI. What does it typically do? Over the last 90 years, on average, what has it done? 7 to 10%. But in 2023, through November, it returned 18%. So if you'd have been invested in the market beginning of 2023, typically, if you're in the broader stock market, you should have had a pretty dang on good year. I had a great year because I'm heavily invested in the broader stock market through ETFs and index funds that track the S&P. So yeah, it was a great year. But does that mean 24 will be a great year? Well, let's look at what happened outside of the stock market in 2023. We know what the stock market did. It did 18%. But what are some other things that happened in our economy, right, in our financial markets? Well, we know inflation came down. The Fed has been jacking interest rates for the last 20 months. And we know that increase in short-term interest rates has pushed inflation down. That's a plus, right? Inflation is coming down. Right now, headline inflation is around 3.2% from the latest CPI inflation report, which would have been in October's. We know core inflation is down to about 4%. October CPI inflation report would give us those numbers. So that's a good thing. We also know short-term interest rates are still at 5.5%. That's not a good thing, in my opinion, especially not for a guy who invests heavily into the broader stock market. Interest rates being at 5.5%, short-term interest rates, is not a good thing. Not long-term, it's not. It's not a good thing. So I have inflation came down, good thing. Interest rates up, not a good thing. What else happened in our economy? What happened with jobs in 2023? Were jobs continuing to escalate in this red-hot labor market? Are jobs starting to de-escalate and this labor market cooling off? I believe in the first half of 2023, they were still escalating. Second half of 2023, it's cooled off. It's de-escalating, right? Because at the beginning of 2023, we were adding 300,000-400,000 jobs to the economy every single month. Last jobs report, we only added 150,000 new jobs to the economy. And I believe that was October's jobs report. So earlier in the year, still red hot. Second half of the year, not so red hot. Is that a good thing or a bad thing? Well, if you're looking at bringing inflation down, that's a good thing, right? It's a good thing because it forces inflation down. Why? Because when Americans get to a point where they're concerned about their jobs, they're concerned about their wages, they start batting down the hatches and not spending as much. And if you don't spend as much, prices tend to come down because you don't have as much demand, right? Supply can start catching up with demand and prices start coming down. So I think in 23, first half of the year, not so good because red hot labor market. Second half of the year, pretty dang on good. You know, from 400 a month, 400,000 a month down to 150 a month and beating expectations is where the Fed wanted the job market, the labor market to be. So that was a good thing towards the end. And that's one of the reasons why you see a little bit of a bounce in the stock market. Now, a lot of people will just say that's a bear market bounce. That's a bear market rally over this last month or so. Because remember, in October, S&P was down by 5%. Then all of a sudden in November, it takes off. And a lot of folks are asking, well, hey man, why did it take off? Well, I think it took off because the Fed sent a clear signal to investors, that they're potentially done increasing short-term interest rates. Why do I say they sent a clear message to investors? Because they haven't increased interest rates in 4 months. 4 months, they haven't done it. A lot of speculation is they will not increase short-term interest rates in their December meeting, which is not this week, but the following week. They won't increase short-term interest rates. So investors, after the November 1 Fed meeting, investors said, aha, they're done. Let's get back in. Let's get our activity back up in the broader stock market. And that's what they did. And I think that's what sent the stock market in this latest rally. That's my opinion. Question is, oh, before we even talk about 24, let's talk about this. Here's some other stuff that happened in our economy that has a lot of people worried. And that's why some of these experts over here are saying that the stock market will crash in 24 based on this information right here. When we look at the American people and what's going on with them from a financial standpoint, it's not good. That's what these experts who are calling for a crash or speculating that there will be a crash, they're pointing to this credit card debt that we have here in America. It's 1.3 trillion. They're also pointing to this $1.6 trillion in student loan debt. You guys got to understand, in October, government turned back on the interest for that $1.6 trillion in debt. And that has hurt a lot of Americans. Because remember, for a long time, they didn't have to pay the interest. They didn't have to pay anything. They basically put it on pause. Well, they took the pause off of it. Now you got to pay. And that's starting to hurt people's pocketbooks. And it's hurting their pocketbook because of what? Spending. Too much spending. Too much spending. So 1.3 trillion in credit card debt, 1.6 trillion in student loan debt, almost 2 trillion in automobile loan debt. Right? So those three right there are not good. And when you put personal savings decline on top of that, that's the fourth thing. Personal savings over the last 2 years has been wiped out, guys. Completely wiped out. So a lot of these so-called experts are saying, listen, here's what's going to happen. American people don't have any more money to spend. Their savings is gone. They don't have the ability to go out and get more money through borrowing. Why? Because interest rates are too high. Interest rates are too high and they can't afford it. So their personal savings is gone. right? They don't have the ability to borrow money, and the labor market is cooling off, is softening. So what happens if the labor market continues to cool and people start losing their jobs? What if unemployment starts to go up? You already don't have the ability to borrow money anymore. We know you don't have any personal savings. So if the labor market continues to soften, people start losing their jobs, boom, recession. 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 And if we have a recession and people are not spending, what happens to companies? What happens to our economy? Our economy stops. It stops. And if companies can't sell products and services to people, they can't make any money, they become what? Less valuable. And that's a direct hit on what? The broader stock market. Because see, the stock market is only made up of companies. It's only made up of companies. So if those companies ain't selling something, products and services, they generate no revenue. Without generating revenue, they got to cut expenses. And the first expense they cut is payroll, employees, benefits. That's why on this side of the aisle, these folks are saying, wake up, pay attention. Possibly there could be a stock market crash in 2024. So I woke up quickly and said, hey, what these people are saying kind of makes sense. Do I need to have a strategy to deal with this if it happens? But then I had to go back on this side and say, hey, there were a lot of wonderful things that happened in 2024. And a lot of experts are saying all of that stuff is behind us, right? All of that's behind us. Fed is getting ready to start reducing short-term interest rates in 24. That's what this side of the aisle is saying. And that's why they're saying, we think the S&P is going to do even better in 24, especially if the Fed start reducing short-term interest rates in 24, which is widely expected they will. So you got one group over here saying, hey, we're pointing to all this bad stuff that happened in 2023, and we think it'll spill over into 24, and it's going to cause a recession. And then you got this outfit over here on this side of the aisle saying, no, none of that's going to happen because the Fed is going to reduce short-term interest rates, which will do what? It will make borrowing a lot more easy and cheaper for people to borrow money. People can start tapping into their equity. Also, what's going to happen is the 30-year fixed rate mortgage rate is going to start sliding down. And if it slides down, guess what that's going to do to the housing market? It's going to explode again. Why? Because demand is going to come back. When demand comes back, activity starts again. Sales start again, right? So they're pointing to interest rates as the savior of everything. The economy, the stock market, right? They're pointing to interest rate reduction. These guys over here are saying, we don't know if the Fed will reduce interest rates. And if they don't, something's gonna break. I'm telling you what's already out here for the American people. It ain't good. If they don't reduce short-term interest rates, something is gonna break in this economy and it's gonna throw us into a recession. If that happens, yes, they will be forced to reduce interest rates because they'll have to kickstart the economy. But that's not the way you want it to happen. You don't want a feast or famine type situation. You want something that's great for everyone, right? So that's what I'm struggling with. And I thought, hey man, I gotta tell my folks what my strategy is. Because, hey, I gotta keep it transparent here. I gotta tell them what my fears are and what my beliefs are so that hopefully they can make a better determination what they need to do. right? I'm just giving you guys what I'm gonna do. I'm asking you to evaluate your own situation and figure out what you're gonna do. That's very important. And I'm doing this way ahead of the curve, right? Because we still got all of December. And as I've said in previous videos, there is a possibility that we could have a December sell-off in the market. Why? Because you may have some of the upper 1% of the wealthiest families in this country. They may take some profits off the table. Like I said, S&P 500 through November, I believe 17th, was at an 18% ROI. So that means if you were invested for this whole period of time, you should have done well, right? And now some of these folks have done extremely well. And another thing that has done well and is poised to continue taking off is the tech industry. Think about the Magnificent Seven in the S&P 500, the type of year they had. If you look at the top 7 companies in the S&P 500 and you smash them all together and you look at their year-to-date ROI, it's crazy numbers, guys. Now again, you go out and do your own check, fact check. I'm just giving you from my data that I read, that I researched. It looks like they were north of 90%. The Magnificent Seven, top 7 companies in the S&P. And those companies are what? Tech companies. They're all tech companies, guys. So they also, the people over here saying, yeah, we're gonna have an explosion in 24, that's what they're pointing to. They're pointing to interest rates coming down, right? And investors piling a bunch of money in the market because interest rates come down. And then they're also pointing to this tech boom, this AI/tech boom that's gonna be happening, right? Those are two of their biggest things that they're hanging their hat on for this 2024 run, right? So you gotta figure out which way are you leaning? Which way are you leaning? Are you leaning towards it's gonna be a crash? It's gonna be a bust? Or are you leaning towards it's gonna be a boom? So bust or boom, which way are you leaning? For me personally, I was scared. I still am a little bit like, But you know, the only thing saving me, here's what's saving me from just selling it all. Here's what's saving me. My history with the stock market. My history with what happened in 2008. That's what's saving me. See, I have that history to lean on. I have that experience to lean on. A lot of you don't. I get it. A lot of you are brand spanking new at this paper assets game, at this paper assets thing. You're brand new. You knew nothing about paper assets a year ago. You knew nothing about paper assets 2 years ago. Definitely many of you didn't know anything about them in 2008, but I did. Remember, I've been doing this for 25 years, right? So when I get scared and I start thinking, ooh, should I make a move? Should I pivot? I have to rely on my experience and my history. My history tells me, this is what my history tells me. Every bear market is followed by a bull market. That's what my history tells me. So at some point, this bear market that we've experienced over the last couple of years, since 22 really, right? At some point, that thing has to end. And it has to go back the other way. It has to end at some point. Now, when it will end, I can't give you that answer. Will it end in 24? Will it end in 25? Will it end in 26? I can't give you that answer. But what I can tell you from my experience, I've been doing this for a long time, it has to end. That's what history tells us. And another little nugget, when I look at what the S&P 500 did in 2023, that's a precursor to me. That's a precursor to what is to come. And again, guys, I'm no expert here. I'm just giving you my opinion, right? I get scared just like you do. The difference between when I get scared and when you get scared, I got history to lean on. See, I can go back to the filter system and say, well, okay, Richard, when you were scared in 2008, you stayed in, and what happened? I made a lot of money. That's what I had. That's what happened. So when I get scared and I say, hey, man, you got 75% of your nest egg, your pot of gold at the end of the rainbow in the stock market thing, are you good with that? You're 55, bro. You ain't a spring chicken. This thing goes sideways for 10 years. Can you handle that? Are you gonna be okay? So I have to have that conversation with myself too, just like you do. Like I said, though, the difference is I can say to myself, yeah, I get you. So you got one guy over here, you got one guy over here, right? The guy over here is saying, get out. The guy over here is saying, man, come on, you done been here before. You done been here before. This is where you make the money at, right here. Right? If you want the big dollars, you gotta get in this pressure. You gotta get in the stress. If you want the big dollars, you gotta put yourself right in the middle of it. You gotta be the guy that says, hey, pass me the ball when the game is on the line. You gotta be that guy, that gal. Pass me the ball when the game is on the line. And so for me, it's like, pass me the ball. The game is on the line. I'm finna make some money in 24, 25, and 26 and beyond. So no, I'm not going to sell off. I'm not gonna flee to safety. Now, it could be a calculated decision that goes wrong. I don't know. I can only lean on my experience. I can only lean on what my experience tells me. Every bear market is followed by a bull market. And is 2023 what happened in the market, in the stock market, the broader stock market? Is that a precursor? Now, it doesn't mean in December of this year, which we're in the month of December right now, it does not mean the stock market won't sell off. Because if it does, my experience tells me that's just people taking profits. It doesn't mean we're going backwards. It just means, for whatever reason, tax reasons, financial reasons, they just want to take some money off the table. Maybe they sell some of their investments and get out of it. And of course, how the stock market works is when mass people take money out of the stock market, it goes down. When mass people put money in the stock market, it goes up. So if you see it go down in December, just think to yourself, why is that happening? Why is that happening? In my opinion, it's happening because people are just taking profits, doing what they do. When they've made a bunch of money, they want to take some of it. They don't want to risk leaving it all in. So they take some of it. They take some of it and they say, well, okay, we'll get back in 24. Or they say, we'll take some of it, but we'll leave some of it. I'm not taking anything. I'm gonna roll the dice, let it all go, right? I'm not gonna take anything off the table other than what I already have off the table. I sold a VGT position a couple months ago. That's still on the sideline. I have not redeployed that yet. I may not redeploy that until I see what happens in December. If there's a sell-off in December, then I will take those proceeds and put them in December, right? If we get a sell-off. Because see, I still believe 2024 is going to be a great year. I tend to side with these optimistic folks as opposed to these pessimistic folks. You have to decide which side you're on. And again, that doesn't mean I don't think about it, guys, because I do. That's the reason I made the video today, to let you know I'm thinking about it, because I'm 55, man. Although I'm still earning, making a good living, that could end at any day now. What if that ends and then all of a sudden I got 75% of my net worth in the stock market, and then the stock market is down? Much different lifestyle for me, right? So I got a lot of skin in the game, but it's my skin. and I lean on history. And history tells me I'm going to be okay. History tells me because I'm telling you guys, the interest rates got to come down. And they coming down in 24. They can either come down in a good environment, in a good economy, they can just slowly bring them down, or they're going to have to rapidly bring them down if the labor market continues to cool off and people start losing their jobs and we go into a recession. They're going to have to rapidly bring them down. So either way, they're bringing them down. They can bring them down slowly or they can bring them down fast. That's up to them. But they're going to bring them down. Either way, I'm going to win. I'm going to win because if they rapidly bring them down, guess what's going to happen? Stock market going to shoot up. If they slowly bring them down, stock market still shoots up. The only way the stock market doesn't go up if they rapidly continue to raise them. If they continue to raise them, then we won't see a bull market in 24. But if they bring them down, slowly, if they bring them down rapidly, the market is going to do good because either way, companies and people get access to money through borrowing, right? They get access to money through borrowing, interest rates come down. And if the 30-year fixed rate mortgage comes down, like I believe it will with short-term interest rates, it'll have a lag. It won't come down as fast as short-term interest rates, but it will be a lag. But when it does continue to come down, all that pent-up demand is going to be released. Because there are a lot of people on the sideline who are waiting for interest rate to come down before they jump back into the let me buy me a house market, let me buy me a rental property market. They're waiting for interest rates to come down, and rightfully so. Because the lower the interest rate, the better the deal they can get. The more property they can afford, the more monthly payment, you know what I mean? So here's the deal. Fed has to reduce those short-term interest rates in 24. So I'm leaning on the side of these optimistic guys because that's what I believe. Again, though, these pessimistic guys over here could be right. The only thing I say if they're right, all I can do if they're right is if paper assets continue to be discounted, I just keep buying. I'm just going to keep buying. I'm not going to be afraid. I'm just going to stay with my plan and just keep buying. Broader stock market ETFs, broader stock market index funds, and the Magnificent Seven. I just keep buying. Those are the three investments I buy, right? Magnificent Seven, VOO, VGT, and perhaps VTI, right? VOO, VGT, VTI, Magnificent Seven. Boom. I just pour it all in, double down. Right? Win or lose, it's my decision to make, right? It's my decision to put it in. I'm going to put more in. So I don't worry about what these guys are saying on the pessimistic side. They got valid points. American people are hurting financially. The only thing propping up the economy right now is the upper 20% of the wealthiest people in this country. That's what's propping it up. But I believe when interest rates come down, that will change. That will change because I think if interest rates come down, then guess what? Unemployment won't go up. Labor market will be okay. Because now companies got what? Access to capital that they can invest in growth. And in order to invest in growth, you got to be able to hire people. See, a lot of what happened in 2000, late 22, early 23, guys, a lot of that activity in the labor market was service-related activity. You got to remember, we were coming out of a pandemic when that was just demolished. The service industry was demolished. So when things started getting better in 21, in part of 22, that's where you saw all the gains in the jobs market. And then then in 2023 early, you saw a tech boom, a little bit of a tech hiring resurgence. But I think the biggest thing that was driving the labor market, in my opinion, was it was service related, where a lot of service workers were coming back to work. Cruise lines opening back up. Hotels opening back up. Airlines opening back up. Resorts opening back up. Disney World, Disneyland, Six Flags, Sea World, all that stuff opening back up. Everything opening back up. And guess what? We had $2 trillion in savings. So people were like, okay, y'all got me stuck in the house for this pandemic thing, but now that it's over, or we got it under control, I got a healthy savings, I'm ready to spend. Also, let me throw in that red hot housing market. Tail end of 20, all of 21, part of 22. That red hot labor market before the Fed started jacking rates in 22. So what I'm telling you is both sides have a really good, strong argument. I personally am an optimistic investor. I personally believe when the Fed reduced them rates next year, I don't know when. I don't know when. I can't tell you when. I do believe they will. And some of the heavy hitters over on this positive side, you're talking about some of your leading banks in the country. Some of your leading financial institutions in the country are saying Fed gonna reduce interest rates. And I always believed they were done. I told y'all that in videos past. The 1% controls this whole country, guys. And I already told y'all the 1% already gave the Fed their marching orders. Why do you think November was such a great month in the stock market? Because when the Fed came out on November 1 and announced that they were not increasing short-term interest rates, that was the 4th month in a row. Now, they did say we're going to keep rates higher for longer. But then they also said, hey, probably June 2024, if things are doing well, yeah, we can see a reduction starting. So, listen, I'm going to fall over here on this optimistic side. I'm not going to worry about these guys on this pessimistic side, although they got a great point. They make a great case. I just know every bear market has to be followed by a bull market at some point. I don't have a crystal ball to tell you when it's going to start, guys, but a precursor is what's happening now. Despite the fact there may be a sell-off in December, and I've explained why I believe there's a sell-off. You go out and do your own homework. You figure out what you think and what you believe. There's a lot of other people out here on YouTube who will give you their opinion too, which is great. Go look at whoever you want to look at. But ultimately, you got to figure out a game plan. I keep telling y'all, this world is going to move forward no matter what you do. Now, you can either move forward with it, or you can just stay still, or you can actually go backwards. That's up to you. But the world is going to move forward, and I'm moving forward with the world. I'm not going to be scared and afraid. I'm going to lean on my experience. I'm going to lean on my gut. I'm going to lean on some of the information that I hear, and if it makes sense to me, my marching orders is to do what? Buy until this next bull market comes. And it's coming. Like I said, if it comes in 24, hallelujah. If it comes in 25, amen. If it comes in 26, I'm going to be ready for it. It doesn't matter. It's coming. Why? Because it has to. That's what history tells us. It has to. It has to. You hear a lot of people, oh, well, Warren Buffett has so many billions on the sideline. I don't care what Warren Buffett got on the sideline. The key is he got billions. So he ain't got to do nothing. I ain't got no billions. I'm trying to build wealth. This joker already wealthy. Oh, he can do whatever he want to do. People always point at that. Well, yeah, Warren Buffett says he has all of his in cash. He's in cash. Well, guys, why wouldn't he be in cash? The dude is a billionaire. I mean, he's 80-something years old and he's a billionaire. I mean, okay. What does that prove? That the market ain't going to bounce next year? No, that don't prove nothing. The dude is a billionaire. If I was a billionaire, I'd probably be on the sideline too. What I got to prove? I'm 80-something years old, filthy rich. So I don't use him as my measuring stick. Although I respect him, he's a brilliant mind, and he's done a lot of brilliant things in the financial world. I can't relate to that. This dude got billions, man. Oh, so my strategy gonna be like his strategy? No, I got a strategy where I'm gonna continue investing so I can get some in my little piggy bank. He got a lot in his piggy bank. I need more in my piggy bank. So I ain't got the luxury to sit around and, well, I'm gonna keep 100 billion on the sideline until whatever. I ain't got that luxury. I'm 55. I'm getting to the golden years. See, this joke already 80 and he's a billionaire. I can't listen to him. I gotta listen to people out here like me who trying to create their wealth too and make a good case for it. That's who I'm listening to. I can't listen to these old school billionaires. I can't listen to those guys. This dude been a billionaire for 100 years, man. I can't listen to him. I gotta listen to me. I gotta figure out people out there like me who building this wealth and got a good case to make for the wealth and how to build it. And then I gotta I gotta take that information, throw it in the filter system, throw out what I don't need, put me a plan together and go forward. That's what I gotta do. And that's what I'm telling you guys to do. Get your information from people who are out here doing it. I wouldn't be getting no information from billionaires. I wouldn't. These dudes and gals are billionaires. When they make a move, they're making a move with a B in front of it. Right? Not with a T in front of it. Or a D. Right? Or a H. They got a B in front of theirs. So I can't relate to that. I got to relate to people who where I'm at and moving up, right? So what I'm trying to tell y'all is figure out who you're going to listen to, figure out what your strategy is, be ready to go in 2024 so that you can put you something in your piggy bank. You need to put something in your piggy bank. I can't even buy one share of Warren Buffett stock. It's so high. I mean, it's way up there. Berkshire Hathaway, go look up that stock. I got people complaining about $400 for VOO. Go look at Berkshire Hathaway stock. That'll tell you everything you need to know. Boy, ain't no regular folks in that. Ain't no regular folks in there. Not no regular folks, not no 99%ers. I mean, come on, man. So all I'm telling you is get you a realistic game plan, not some billionaire's plan. Oh, I'm on the sideline. I'm on the sideline. Listen, man, you got to get you a plan that can get you to where you need to go. The billionaires good. They done. They done. Get your plan for you and be ready to rock and roll. You got 1 month left in 2023. Matter of fact, you don't even have a month left because I believe today is what? December 3rd? So you got what? 27, 28 days left, and them ain't all working days because you got holidays thrown all up in there. So you ain't got much time left in 23 before it's in your rearview mirror. You better figure out what you got going for 24. You better figure out what your budget looks like for investing. You better figure out how to get some side hustles going prior to the end of the year so you got more money to do what? Multiply. You better figure out this credit card debt thing, this student loan debt thing. I had a gentleman the other day send me an email and said he had $80,000 forgiven. I don't know how he pulled it off. I don't know how he did it, but he said he got $80,000 worth of student loan debt forgiven. Wiped away. Y'all better go find that plan. Some of y'all, however he got that done, I don't know because I didn't ask him. I don't have no student loan debt. So I didn't have no reason to ask him, right? But I'm sure there's something out there online that you can figure out how to get this stuff, Be careful with scammers now. I don't know how he got it done. Maybe Maybe he worked for the government. Maybe I don't know. Maybe he was a teacher. I don't know how he did it. But he said he had $80,000 worth of student loan debt just forgiven, wiped out, gone. So whatever that plan is, go search it out, but just be careful for scammers, right? Be careful, be careful. And then if you got car loan debt, guys, y'all know how I feel about that. And the only reason I'm having this conversation right now with you about this part of the video is just, guys, we gotta get this right when it comes to money. We have to have a better relationship with money. We have to understand that we cannot get to wealth unless we change how we look at money and how we use money. We got to change that. Or really, it doesn't matter if there's opportunity in the stock market in 24 or 25 or 26. It doesn't matter because you ain't gonna have no money. I don't care if there's opportunity if you broke. If you broke, ain't no opportunity. Opportunity can only be taken if you got some money. If you're not broke, you can't be broke and take advantage of opportunity. So I've been asking you guys to sit down and think about your goals. Think about you and make a commitment to those goals. I've been asking y'all to sit down, write down your goals. They need to be realistic. They need to be measurable, right? And then they need to be actionable. You gotta sit down and put these goals down on paper. They can't be generic goals. They gotta be super, super specific, right? And then you gotta say to yourself, okay, here are my goals for 2024. Is my income and expenses in line with what I want to accomplish? And if it's yes, kudos, start investing. If it's no, you need to sit down and figure out in your expenses, what's going on? How many wants do I have? How many needs do I have? And you got to eliminate the wants to free up some cash, to be able to invest, to meet and exceed these goals. You got to also be in a position where you take your downtime when you're not working your primary occupation or primary way that you make money. We all have downtime. None of us work 24 hours a day, guys. I know some of us try to act like we do, but we don't. We all have downtime. Let's just be honest here. Question is what are you doing with that downtime? Are you being a producer or are you being a consumer? If you're doing a lot of consuming, guys, you're going to be broke in 24. Turn that into production. Be a producer. And that's where the side hustles come in. Now, I done put up a couple videos about side hustles. They didn't really do that well. Nobody really watched the videos. But listen, man, let me tell you something. I've done my part. I done my part to try to encourage, uplift, provide information. That's all I can do. See, I can lead a horse to water, but I can't make that horse drink. Right? I can lead him to water, but I can't make him drink. Got to be willing to drink. Same here on this YouTube channel. I can provide the information, but I can't make you do anything with that information. That's on you. One thing I will guarantee you, if you do the same things you did in 2024, you'll get the same results you got in, if you do the same thing you did in 2023, you're gonna get the same results that you got in 2023. Carry those same activities over to 2024. You're gonna get the same results you got in 23. So you're gonna get them in 23, you can get the same results in 24 if you carry over the same activity from 23. You gotta change the activity. Gotta change the game. You gotta do something differently if you want to make a difference. If you want to get yourself to a point where you can see your net worth starting to increase. Some of y'all my age, I ain't got much time left. Some of y'all ain't got much time left. Y'all my age. You got no time to waste. You should be getting off this live or getting off out of this video and going straight to a piece of paper and a pencil and start writing, being honest and truthful with yourself. Oh, I don't know how to do that. Yeah, you do. Everybody know how to write down how much income they got and then how much what they spending it on. We all know how to do that. We ain't got to be no PhD in mathematics to figure that out. You know exactly what you write down your income, write down what you're spending it on. And then whatever you're spending it on, ask yourself this question. Is this critical to life? Is this activity I'm spending this money on, this stuff, is it critical to life? Is it a necessity? Is it a need? And if it's not, you got to cut it out. You got to banish it. You got to discontinue spending money on that. I don't care what it is. It can be golf. It can be hanging out. It can be getting your hair done. It can be going shopping. It can be taking vacations, buying cars, whatever we do with our money to try to act like we rich, try to act like we doing great. Whatever we do with our money, we got to cut all that out and then just focus on the basics. Okay, food is a necessity. Let me go to the grocery store, buy my food, bring it home, I'm gonna cook it. Let me take my lunch to work. Instead of me going out every day to wherever I go and spending all this money for lunch, why don't I just make my lunch at home and I take it with me? Because I gotta get real and get my finances together and get to some wealth in 24, 25, and 26. I gotta get this filter system right. I gotta reprogram myself. I gotta be ready to go. I'm getting older. Ain't nobody gonna save me. I gotta save myself. That's what I do, and that's what I help people with in RF Financial Consulting. I help them with that very thing. It's unorthodox. It ain't the traditional way you do it, right? Because I'm one of these people, like, I don't write nothing down for you. I don't send you no follow-ups. What I do is I spend 1 hour with you, and we get to the nitty-gritty. Get a plan that you write down. I don't write it down. I don't type it out. I don't send it to you. See, that's the problem with us, a lot of us in this country. We want everybody to do everything for us. Okay, I'm gonna pay you the money, but I don't want to write nothing down. I don't want to do nothing. I want you to tape it. I want you to record it. I want you to send me a whole outline of it. I want you to step by step me. I don't want to have to go to the internet and do no research. I don't want to do none of that. See, that's the society we live in. That's why a lot of us are broke. That's why a lot of us are broke. Because we want somebody to come grab us by the hand and skip us down the yellow brick road to go see the Financial Wizard of Oz. A lot of us want somebody to come do that. And when they can't get it, then they back away. Oh, I knew that's a scam. I knew that wasn't. He ain't gonna show me everything I need to know. That's a scam. No, it's not. No, it's not. You shouldn't be looking for people to do all that for you. What you should be looking to do is someone to help you get a game plan together. Then you got to have enough skin in the game to execute it. I'm a one-man show. I don't have 30 people back here working for me. I'm just me. I do all this content on my own. I don't have time to be following up with people and doing all this other stuff. I'm not going to do that because you don't need that. That's the reason you're in the position you're in now. You got to learn how to take concepts and then run with them. You're going to learn on the run. You can't know everything before you start running. No, start running and you'll learn as you run. That's what it's all about. If you're going to get to wealth, you're going to have to take control of your own financial situation. But again, in these one-on-one sessions that I do, I can certainly help you get a start. I can't save you, but I can give you my 25 years of experience in doing this. And put you on a simple plan. Then all you got to do is just discipline yourself, be consistent, and be patient. And if you do it over time, you'll build wealth. You'll build wealth. That's what I do in RF Financial Consulting in these one-on-one financial sessions. Now, if you're interested in that, guys, certainly there's an email address down in the description box. That's my company. I'm solo, one-man show. But I'm passionate about this. This is what my purpose is. This is what I'm called to do. And I can tell you what, anybody that's had those one-on-one sessions with me, I give it to them real. Now, if you want to get on there and talk about a certain thing and that's all we talk about, I'm okay with that because it's your hour. My job as a consultant is to lend you experience on certain topics, certain financial topics that you want to get my experience on. If you want to learn about side hustles, if you want to learn about what I did to invest in paper assets to build my wealth. I'm not a financial advisor. I don't take money from people and invest it for them. I don't do that. What I do is I tell people exactly what I did in the blueprint I follow. If they want to follow that blueprint, if they want to take pieces of that blueprint to create their own blueprint, have at it. Now, if you want to go get you a financial advisor, you can go do that, but that's not what I do. I don't take money from people invested in stuff. I don't do that. What I do is walk people through why you should be considering investing and how to change your mind and your behavior with money so you can be consistent and disciplined and patient when you do it. That's what I do. And then I talk to people about real estate. Same thing. Hey man, here's a simple concept. Here's a blueprint. Follow this blueprint. You can put yourself in a position where you can build a real estate portfolio that can do whatever you want to do with it, right? So that's what I do in the company, and that's what I'm really, really passionate about. Love doing the videos and the live streams as well, but I'm really passionate about them one-on-one. So if you're interested in that, there's an email address down in the description box for RF Financial Consulting. Shoot me an email, and let's chop it up and see if I'm the right fit for you. Having said that, let's move on. Let's move on to 2024 and what I believe we can expect. And then we're going to wrap this thing up. So I believe in 2024, in that first quarter, the Fed is going to do the same thing they're doing right now. They're going to meet. They're going to keep on talking about inflation. They're not going to bump rates, but they're not going to reduce rates. Not in the first quarter. So it's going to be more of the same. Well, you know, we're going to look at the data. Right now, we're not going to do anything, but we certainly always have the option to increase rates if we see a change in inflation, et cetera, et cetera, et cetera. I think that's what you're going to get, right? And then what you're going to see in the first quarter of the year, you're going to see the market act accordingly to what the Fed says. I think after that, going into the second quarter of the year, I think at that point, we have an opportunity for the Fed to start reducing short-term interest rates. And then I think that's when we see a real pickup or more consistency in the stock market, more of a consistent trajectory, as opposed to this good 1 month, bad 1 month. You know, we're going to see more consistency. That's what I believe. And as they continue to reduce those interest rates, we're going to see more and more consistency. So for me, it's dollar cost averaging in every single month, just dollar cost and averaging into that consistency. It ain't the full bull market yet, right? So I want to continue averaging in to that consistency, month in and month out. And then if I catch companies like Tesla or Apple or NVIDIA or Meta, Microsoft, Amazon, Alphabet, I already mentioned Tesla. If I catch those 7 companies having a down month or a stock price decline, then I may just jump on them because I know eventually they're going to go back up, especially Tesla. Because I've done that in all of 23 with Tesla. If I catch Tesla down, that might be an opportunity for me to catch a quick buy on Tesla and then wait till it shoot back up and then exit. That has nothing to do with my dollar cost averaging. I do that every month regardless. But if I got an opportunity to make some money with one of the Magnificent 7 above and beyond what I'm doing weekly in the Magnificent 7, then I may take that opportunity. So that's what I'm going to do in 24. I'm just going to keep doing more of the same. Keep buying, looking forward to the payoff because I think the payoff is coming. Now, again, I'm not 100% accurate here. I could be wrong. But I believe what history tells me, every bear market is followed by a bull market. So when I'm investing for the payoff. The payoff is the bull market. Because if I'm investing in a bear market, constantly investing, buying, and then all of a sudden, boom, we go into a bull market, history tells me if I'm buying the right assets, they should go up in value. Buy low, sell high. That's what history tells me. And again, I'm just a guy on YouTube, not a financial advisor. So you go out and figure out what your strategy is, but you better have something. You better have some game plan for 24. I just gave you mine. Mine is more of the same. I already told you what I'm investing in. VGT, VOO, potentially VTI, and then obviously the Magnificent Seven. That's it. Nothing fancy. Same old, all big boys, all blue chip, all historical performance, track record to lean on. I'm not doing no Bitcoin. I'm not doing no Ethereum. I'm not buying no meme coins. I wouldn't put I ain't messing with none of that crypto stuff. None of it. Because you already know what already happened with crypto. Now, that don't mean it can't bounce back. You see what Bitcoin did. But no. Don't have a long enough track record for me. That's just me. Bitcoin just does not have a long enough track record for me to put my life savings in it. I'm sorry, it don't. I can't put my life savings in something that has no underlying value to it other than what somebody say it's worth or think it's worth. That's the only thing you hang your hat on. Okay, Jim said it's worth 50,000 a coin. 2 months, Jim says, no, it's worth 25. I can't, there ain't no operating company. There ain't no, I can't put my money in that. Not the nest egg. Y'all might can, but I can't. So no Bitcoin for me, period. No Ethereum, period. No crypto, period. Outside of the prime real estate fund that I'm creating, outside of that, no real estate for me in 24 either. And let me walk you through why I say that. In the prime real estate fund, that's going to be a collection of investors putting money together to buy real estate. 1 to 4 family real estate, cash. That's not just my fund. That's going to be the investors fund. I'm going to be one of the investors, but there'll be many other investors in there. That's not I'm the creator of the fund and I'll be the general partner of the fund, but there'll be many limited partners or however we structure it, right? My point is that will be buying real estate. But personally, Richard Fain personally won't be buying any real estate. And the reason I ain't gonna buy no real estate personally is because I borrow money to buy real estate. I do not pay cash for my personal real estate. Prime Real Estate Fund will pay cash. Ain't no loans. We collect 20 million, we collect 30 million. Every dime goes to buy real estate, income producing real estate. On this side, for me, on the personal side, the only way my blueprint works is I gotta be able to borrow money cheap. I can't borrow money at 8% and make the real estate on the personal side work. Not for me. Some of you can. I can't. I need to be at least 4% interest rate or lower to make it work. So until interest rates come down under that, then I won't buy any personal real estate for investment. I probably won't have to again anyways, because I'm gonna have the prime real estate fund, and anything that I wanna invest, it'll go into the prime real estate fund. And then that will be the entity that will own my real estate portfolio or the money that I put in real estate, right? For income. So the prime real estate fund is coming along quite nicely. I got a ton of you guys who have emailed me and said, hey man, put me on the investor interest list. So once this thing is formed and you're ready to roll it out, send me the information, let me dissect it, let me take a look at it. But from what you've said, I kind of like that concept. And that's all I can ask for from anybody that's interested in the prime real estate fund. Again, the prime real estate fund is going to concentrate on residential 1 to 4 family dwellings in amazing communities and amazing neighborhoods. You didn't hear me say nothing about rich neighborhoods or wealthy neighborhoods. It's just amazing communities that people have a desire to live. Right? We're going to start in Boulder, Colorado. and we're gonna be here in Southwest Florida, where I live. So Boulder, Colorado, Southwest Florida is where we're gonna start buying these properties once we get this fund up and running. And like I said, they're gonna be 1 to 4 family dwellings. Why? Because in my opinion, that's the safest place to be when it comes to real estate for income. Now, if you're somebody that's going out buying, 1,000 apartment units, 2,000 apartment units, 5,000 apartment, that's a whole different ballgame. I ain't got nothing to do with that. I'm talking about small investment funds that concentrate on 1 to 4 family dwellings, not 1,000 unit multifamily properties, right? That's not what I'm doing. I'm not saying we won't ever get to that point, but right now that's not what we're concentrating on. What we're concentrating on is what I just said, right? And we're gonna hold those properties 3 to 5 years before we exit. And the goal is to be able to return on a quarterly basis to investors some type of income, right? So we collect rent, we pay our expenses, and then we set aside some money in reserves, and then whatever's left, profit, we can go ahead and move that to investors, hopefully on a quarterly basis. That's the key. And then, of course, when we exit a property, right, everybody will participate in that commensurate to what their investment level is. Someone puts in $10,000 will get a different return than someone who put in $100,000. That just makes sense. You don't get the same amount if you put in less. Whoever puts in more typically gets more. Now, the minimum investment is going to be $10,000, and the reason I did that is because I want to make sure we people that are investing in this fund kind of have their behavior with money right. Right? I don't think you should be investing in a fund like this if you got credit card debt. I don't think you should be investing in this if you got a ton of consumer debt, period. If you don't have an emergency fund, if you're living on more than what you make, if you're not already saving and investing, you shouldn't be investing in any of that stuff. Nothing. You need to get that part right. You get those 4 fundamentals right. Then you can invest. And typically, that's what we're looking for. Someone who has those things already in place and says, hey, I'd love to get into real estate, but I just don't want to manage tenants and toilets. I don't want to take on the burden of me having to go out and get a loan and all this other stuff. I'd rather put my $10,000, $50,000, $100,000, $1 million into a fund that is going to be properly managed, has the right assets, and is a moneymaker. That's what I'm looking for. So that type of investor is really who we're going to be looking for. And like I said, a lot of you guys have already hit me up and put your name on the interest list. So for those of you who want to also do that, like I said, email address down in the description box. Send me an email and just reference the Prime Real Estate Fund, because that's the name of the real estate fund. It's the Prime Real Estate Fund. And the reason we call it Prime is because we want to buy real estate in the most prime locations we can afford to buy. We want to buy the prime real estate in the locations where we believe people have a desire to live and we can afford. And that's what we're going to do. We're going to just keep growing it, right? As wide as we can grow it. But that is really the mandate. And the reason I wanted to do this fund is so that I could, have people from the YouTube channel and from my other social media platforms who have an interest in real estate, but just don't really know, a whole lot about it. But they also don't want to be bothered with the administrative end of owning real estate. Right? They don't want to be bothered with the property taxes. They don't want to be bothered with the property insurance and the repair and maintenance and all that other stuff. They don't want to be bothered with that. But they want to have a piece of their portfolio in real estate. So if that sounds like you are interested in that, like I said, shoot me an email and we'll talk about it. So one last little quick update on the Magnificent Seven. And then we're gonna close this thing out because we in here for a little bit. So the Magnificent Seven like I said, is the top 7 companies in the S&P 500. And some weeks ago, I decided, you know something, why don't I carve out some money and build me a portfolio of individual stocks? Even though that's a small part of my portfolio compared to the ETFs and the index funds, it's a very small part. But let me pull out 62K, and over the next 15 months, once a week, go ahead and dump $1,000 evenly split between the 7 companies, the Magnificent 7. So that's what I'm in the process of doing that, and it's doing great. And again, the whole concept for me was when I looked at the Magnificent 7 and I saw the massive return that they had in 2023 as a collective. When you put them 7 together and you saw that 90% ROI, I said to myself, shoot, if I can get that in 24, right? If I can get that in 24, that's a good deal. If I could put 62 in, get 62 out, and capital gain, that might work for me. All right, I got a little bit of money over here laying on the sideline, ain't doing nothing. Why don't I test that out? Let's see if the Magnificent 7 can repeat what they did in 23. So that got me to going, and I mentioned it to you guys, and I've been saying, now that doesn't mean I'm trying to get you guys to go put your money in the Magnificent 7. I'm just telling you what I'm doing and what my goal is. See, that's what I keep telling y'all. You got to sit down, look at your goals, and I said to myself, one of my goals is create a portfolio, a small portfolio of stocks. Oh, why not the Magnificent 7? Why would I need to recreate the wheel? I don't need to go out there and recreate the wheel. Boom, there's the wheel. It looked good to me. It rolled. Let me try this wheel. So I said, let me put that 7. Didn't go out and research them and do all this other stuff. Not that you can't go out and research. If you want to, go ahead. I don't need to research Apple. I don't need to research Meta. I don't need to research Microsoft. I don't need to research Amazon. I don't need to research Alphabet. I don't need to research NVIDIA. I do not need to research Tesla. So it wasn't no research. This is what they did in 24 as a collective. Let me try them in this is what they did in 23 as a collective. Let me see if they can repeat that in 24. So I decided to put $1,000 a week into those 7 companies, evenly split, through the Webull app. So I got the Webull app. Go in there, dollar cost, go in there and do $5 fractional share trading. You can do fractional share trading. So I take like $143 fractional share trading in each one of them. That comes up to $1,000 basically. Do that every single week for 15 months. Roll the dice. Again, history tells me this is what I potentially could expect. History, right? Remember I told you what happened in 23? Now, 1 year doesn't make it a sure bet, but it's my money. And see, I'm a believer in, unless I'm willing to take some financial risk, I get no financial gain. I get no financial reward. If I can look at the 7 top companies in the S&P 500, they represent 28% of the power of the S&P 500. Those 7 companies represent 28% of it. The other 493 companies represent the other 72% of it. I'll take my chances on those 7. Because like I said, if there is no financial risk, then there is no financial gain or reward. So I got to be able to risk some of my money if I want to grow it. I can't just sit here and say, well, I'm gonna stick it in that CD over there and cross my fingers. No, because I'm gonna tell you what's gonna happen. Them CD rates gonna go down. As soon as the Fed start decreasing short-term interest rates, when that CD renews for you, you ain't gonna get no 5% no more. That's going away. That ain't gonna last forever, right? Especially for us folks who are in the building stage of wealth. That's not gonna last. Now, someone who says, Richard, I'm in the enjoyment stage of wealth. I'm already built my wealth and I just want to protect it. I'm all for it. Them CDs, keep them in there. I'm okay with that because you've already built your wealth. You're trying to protect your wealth. You don't want risk, right? You don't want a lot of risk. You're willing to take a little small reward, which is what that CD gonna pay you. That small reward because you don't want to take a lot of risk. I get that because you already built your wealth and you're trying to protect it. But for those of us who ain't got no wealth, trying to build wealth, your little $5,000 you got in that CD, that's not gonna build no wealth for you. Because when the Fed start driving down them short-term interest rates, that CD rate you got right now, it's going down. Right, it's going down. It's gonna go down with the short-term interest rate. Same thing with them treasury bonds. You're not gonna get a 5% 10-year treasury bond if the Fed funds rate is 2.5%. You're not gonna get that. You ain't gonna get it. You ain't gonna get it. So all I'm telling you is if you're in a building stage of wealth, you better come up with a little bit more of a strategy. And again, I'm not telling you to go out and take blind risks. I'm telling you to figure out, number one, you need to figure out what do I want to build my wealth to and how much income do I need that wealth to create? Because that's going to tell you what you need to invest it in. So if I need $1 million in net worth at a 6% rate of return to create $60,000 a year in passive income, you better find an investment you can put your money in that can get you to this $1 million, right? I don't know if a CD can do that for you. I don't know if your high yield money market can do that for you if you're in the building stage of wealth. If you already got 3, 4, 5 million and all you want to do is protect that, hey, I'm with you. Put it in a treasury bond. Put it in a high yield money market. Put it in a CD. I'm with you. If that's all I got and I'm done earning, I ain't got no more active income, I'm done with that part of my life, and all I got is this income I'm getting off these investments, I can't afford the 50% of it to decline. I can't afford that. Or I ain't gonna be able to take care of myself. So yes, I pull that out of the market and I put that in something safe, but I'm already created my wealth. But if I'm trying to build wealth and I'm trying to flee to safety and I'm trying to build wealth, well, you ain't gonna build no wealth. Not in my opinion. Not if you are not willing to take some risks, right? If I can't grow my money, if I can't double my money, if I can't multiply my money by 8 to 10% a year on average, now like 2022, I didn't multiply by 8 to 10% because it was negative. But then I bounced back in 23 and guess what happened? S&P, 18% rate of return. I can live with that. Now you average those two out. Let's say you averaged them out. Let's say I had a negative 3%. But if you average out this 18 and you average that out, I did okay over a 2-year period. I did okay. So my goal is to get that 8 to 10% rate of return. Some years it'll be down, but over time, over a 10-year period, if I can average 8 to 10%, that's building wealth, man. That's building wealth, in my opinion. That's building wealth. So that's the strategy I'm on, is try to find investments, align myself with investments that can give me that 8 to 10%. I'm trying to align myself with these investments that can give me that 8 to 10% rate of return. VGT, VOO, Magnificent 7. Go look them up. Go look them up. Go look and see what VGT and VOO have done in 2023. Go look at their 10-year as well. Go look at the 10-year. Go on Vanguard's website and look at the 10-year rate of return on VOO and VGT. Go look at the 10-year rate of return on the Magnificent 7. I'm just saying, man, if you're looking to grow your wealth, if you're in the building stage of wealth, this is the kind of mentality and the thinking you got to start thinking. I got to get at least the 8 to 10% return on my money over a period of time, right? If I got $1,000 to invest, I get an 8% rate of return, and I invest that $1,000 over the next 10 years. I should have a couple $100,000 in my nest egg. I get an 8% rate of return over a 10-year period. Average return of 8% over 10 years. $1,000 a month. I should have a couple $100,000 in my nest egg. So for somebody out there saying, you know something, zero net worth, very little net worth, but I got decent income, I can reprogram myself so I can stop spending money to make other people wealthy. I can reprogram myself to stop doing that. And man, if I can put $1,000 a month away in something that can grow it by 8% over a 10-year period, I got a couple $100,000 in my nest egg now. So if I'm a 50-year-old guy or gal, and I say, hey, I got $1,000 a month, by the time I'm 60, if I'm consistent, patient, and disciplined, I could have a couple $100,000 in my nest egg. All I'm saying is you got to figure out what you're trying to grow it to. And then you back into investments that pay a high enough, over history has told you they pay a high enough average rate of return so you can put money into it and then go ahead and get to where you need to get to. That's all I do. I just go out, grab me a calculator online, financial calculator, and I go to playing around with it and say, well, okay, if I can get an 8% return here over a 10-year period on VOO, VGT. Now, I won't be in the Magnificent Seven 10 years, but you got to also understand VOO includes the Magnificent Seven too. So I'm always invested in the Magnificent Seven. I just pulled them out and did me a little one-off, right? Because typically I don't do that type of one-off, but I just decided to do it because of what I saw when I researched them. I was like, whoa, 90% rate of return. I might try to duplicate that in 24. Now, will it happen? I don't know. History says it can do it. Let's see if it can repeat itself. That's the game plan. Really simple, really clean. No real estate other than the prime real estate fund. Paper assets, VOO, VGT, possibly VTI, and then the Magnificent Seven, right? As it relates to active income, continue doing the YouTube channel, right? Helping enough people get what they need. I get what I need. Still do affiliate marketing. Still do the financial coaching, the one-on-ones. And then again, like I told y'all, I just had a meeting with my daughter yesterday, my oldest daughter. She into that internet stuff. She into this social media stuff. She into this building website stuff and managing stuff. Her and I had a good conversation. She's going to manage all of that for me. She's going to build this new website for me. And we're going to start doing some big things, her and I together, with this website and with our audience, right? All good, helpful stuff, guys. All good, helpful stuff. So that is another thing that I'm doing in 24, right? That we're going to get up and running the first quarter of 24. So I got a lot of stuff, man, that I'm involved in. Even off the YouTube platform, other things in the community that I live in, I'm involved in. But I'm only involved in things that help people. If it ain't helping people, I don't want nothing to do with it. That's just me. I'm only involved in things that help people. Because I'm at a point in my life where if it ain't helping people, then it ain't gonna do me no good. It brings me no joy. So I gotta be doing something that help people. Now, and I know if I help enough people get what they want, y'all know, I'm gonna get what I want from a financial standpoint. So I never put money before I put people first, then money. Because I always know if I help enough people, the money comes, man. The money comes. I don't worry about money because I know how to make money. I know how to get out and multiply money. I did it for a long time and it's not a problem. So I don't put that first because that brings me no joy. That brings me no happiness. Putting money first brings me no happiness. How many cars can I have? That don't make me happy. You know, when I'm out driving one, it may give me a temporary little jolt of energy, a little smile, but it just gives me no joy. What gives me joy is helping people get to their financial freedom. What gives me joy is helping my children realize their financial goals and reach their dreams. That's what motivates me at this point in my life. It's helping you guys and my girls, my children. That's it. That's it. Those are the two things that help me. Now, above all of that, obviously, you know, is God, my relationship with God and Jesus Christ. That's the most important thing to me in my life, followed by my children. And then you guys are third, right? So it's God, my children, and y'all. That's it. Everything else takes a back seat to that. So I'm gonna keep rocking with you guys, and I hope you keep rocking with me. I hope you keep rocking with me. I hope you guys continue to support me on this platform. I still don't have my Instagram account back. I don't know what's going on because you can't contact nobody at Instagram, right? You can email them, but you can't. Oh, hey, Instagram, this is Richard Fain. Can you turn my account back on? No, you can't do that. So I don't know. Every time I try to I go into the account, it keeps saying they reviewing it. I'm under review. So again, it's probably some impersonating scammers because it was a bunch of them on Instagram, and there's still a bunch of them on Instagram right now, guys, saying they me, and I'm not. I had one of my subscribers today. She sent me an email, and she said, "Hey, you ain't on Instagram? You on Instagram?" I was like, "No, I'm not on Instagram right now." She said, "Well, golly, man, there's like 4 or 5 jokers on there that say they're Richard Fain, got all your pictures still, everything." I'm like, now hold up, let me get this straight. The real Richard Fain gets kicked off, but you got 5, 6, 7, 8, 9, 10 fake impersonating Richard Fain still on there. Boy, I tell you, these social media platforms, something else. So then I go to Twitter, right? So I got X or Twitter, whatever you call it. So I go to Twitter, and I ain't got a big presence on Twitter. I think I got like 4,000 people following me on Twitter, right? But I go to Twitter every morning because I post like a little positive message every morning on Twitter. So I go to Twitter, and I noticed somebody with my same name followed me. I'm like, well, how in the world Richard Fain followed me when I'm Richard Fain? I said, well, maybe it's another Richard Fain. Click on this scammer, man. This joker done got all my pictures. So then I go into X, Twitter, and I click on the thing where you report somebody. So I click on that, and I go to report this scammer. Man, them people took me through all types of hoops. I had to upload my ID. I had to do this. I had to do that. I'm thinking, But these social media platforms, man, I don't know. Like I said, when I look back on the Instagram thing, I made the mistake. I made a mistake. I took a hard line stance against paying for the little blue check mark, and I probably should have did that. So when I look back on my mistakes, my mistake was I should have just paid them the $15 a month and got the little blue check mark. Maybe they'd have left me alone. But when I didn't do that, obviously you got 7, 8, 9, 10 impersonators on there. Some kind of way, I think they got me confused with them. And the process to get the account back online, I don't know. Sometimes it takes a while, I guess. I may not ever get it back. So I'm sorry about that, guys, because I know that was a way for a lot of you guys to reach me. Unfortunately, I'm not on there now. So please don't get yourself scammed by people sending you anything on Instagram. I'm not on Instagram right now. When I'm back on Instagram, I will definitely let you guys know, and you'll be the first to know because I'll do a video and I'll make you guys aware that I'm back. Right now, I'm not. You can reach me on X, which is Twitter, and it's just Richard Fain. It's Richard Fain 28. You can certainly get me on Facebook. It's RF Millionaire Mentor on Facebook, but that link is down in the description box. And my Twitter is down in the description box too. So both my Twitter and my Facebook is down in the description box for any of y'all that want to contact me that way. And then of course you can email me, which is probably my preferred method because ain't no scammers can track you that way. Because if you go on Facebook and like me or something or follow me, them jokers might see it and instantly they're gonna try to shoot you a DM or something or an instant message. So maybe the best thing to do is just email me. Like I said, nobody can mess with that because it is what it is, right? So having said that, guys, it's been fun. I enjoyed my time with you guys tonight. And again, yes, I was definitely concerned about the stock market. I was definitely concerned about what was going to happen in 24. Should I take that 75% of my nest egg? Should I start pulling that back? Or should I, and just get out altogether and leave it in money markets until I thought about it. So I said, but if I'm thinking about it, there got to be other people that follow me on this platform thinking about that too. They probably saw the same articles I read. So let me address this. Let me tell them what I'm doing, what my perspective is, and how I feel about it. Again, that's just one guy's opinion. You got to make sure you figure out what's right for you and your situation. I'm just giving you my opinion because I know some of you guys value my opinion, right? Some of you value my opinion, and so I wanted to make sure y'all know perfectly clear where I stand. Do I worry about it? Yes. But it's not enough to prevent me from building wealth because I got history telling me, Richard, you've been through this before. And I know a lot of you don't have that history. I know a lot of y'all don't. That's why I wanted to share this with you guys so that you could say, well, hey, this cat that I follow on YouTube, he got some history with this. He gave me his opinion on it. Now I get to just sit down and figure out what's best for me. And if I decide to push forward, great. If I decide to sit where I'm sitting, then that's a decision you got to make and live with it. All I can tell you is figure out what's important to you financially. Doing what you're doing today, can you get there? If it's no, then you got to change something. And that change may involve getting yourself financially uncomfortable. You may have to get financially uncomfortable in order to get to your pot of gold at the end of the rainbow. Because if this thing was easy, guys, we'd all be millionaires. It ain't easy. It's scary. But you know what's more scarier than that? When you get to an age where you can't trade time for money anymore and you got zero assets. That's more scarier. I'm gonna go with this scary over that scary. I don't wanna be some 70-year-old dude who can't actively trade time for money anymore and I'm living on Social Security and that's it. I can't even enjoy my golden years because I ain't got enough money. I'm constantly worried about how I'm gonna make these little ends meet with the little bit of money I'm making from Social Security. You don't wanna be in that position. And guys and gals, anybody that's in that position, I'm not picking. I'm just telling you, you don't wanna be in that position because I've been around family members and friends and clients who've been in that situation. It's not good. I don't wanna be in that situation. I wanna be able to have some assets. I wanna have good health and I wanna have assets. And I wanna be able to go out in this world and enjoy my life. I wanna help people. I wanna be positive, right? And when I leave this place, I just want it to be job well done. Job well done. I want my girls to be proud of what their father has done. I want you guys to say, hey, this cat helped me. This cat showed me that there was a way to do this thing, reprogram myself, and get there. See, that's what's important to me, guys. But I don't get to do any of that unless I build assets. See, I don't be in this position right now in front of you if I didn't build assets. I'd be still trading time for money. I would not have the luxury to be doing this like I'm to the capacity that I'm doing it. Well, I'm on here every single day doing something. I wouldn't be doing that. But the only way I get to do what I'm passionate about and what my purpose is in this life is I had to build assets that freed me up. It freed me up from doing something that I had to do, but it freed me up from it because now I can afford to free myself up from it. And that's what I want for you guys. I want you to be in a position where if you don't want to trade time for any money anymore at some point in your life, you can walk away from it. You can walk away from it, and that's when you can really go chase down the things that really mean something to you, that you're really passionate about. Maybe some of y'all want to, spend more time with your family. Maybe you got grandkids you want to spend more time with. Or maybe you want to write a book. You just want to take some time off and write a book about your life. It doesn't matter if someone buys it or not. You just want to do it. Maybe you want to go out and volunteer your time to people who are in need. I don't know. Whatever your thing is, Wouldn't it be great to be able to go out and do that without having to worry about how you're gonna pay for your lifestyle? The only way you get to do that, guys, you gotta have assets. You gotta have assets that produce passive income. That's the key. They have to be able to produce passive income. You gotta give up something in the short term to have everything you want in the long term. And what's everything you want in the long term? It has nothing to do with money. See, a lot of people miss that. They think it's about money. It don't have nothing to do with money. So I gotta give up something now to get everything I want in the long term. Money is not one of those things. What I just told you about what I want in my life, that's what I get. It's not the money. The money is just a tool. It's not the money I'm chasing. I'm chasing that. I'm chasing helping you guys full time. I'm chasing helping my daughters. I'm chasing trying to be the best Richard Fain I can be. I fall short, but every day I get up and I try again. My goal is to be better today than I was yesterday. That's the goal. But I don't get to do any of that if I didn't give up something 25 years ago, 20 years ago, 15 years ago, 10 years ago. Had I not gave up something, then I would not be able to chase and do the things that I do now that mean the world to me. So all I'm telling you is you gotta give up something. What you gonna give up? What you gonna give up? You gotta give up something if you want something. That's how it works in this life. We give up something in order to get something. What are you gonna give up? What are you gonna give up? Only you can answer that. I appreciate you guys. If you want them 12 free stocks from Webull, y'all know they're down in the description box. The link is down in the description box. Click on that Webull link. Open up that new Webull account today. Go get that free stock. Go get that free money. You put any amount of money in that new brokerage account, they're gonna give you up to 12 free stocks for just trying out their brokerage app, right? Just trying out the brokerage app. And then if you send me an email and you say, hey, Richard, I opened that Webull account. I put some money in it. Can you please send me the tutorial video so that I can kind of walk through that video to kind of see the basic stuff I need to do in order to buy some paper assets? I'll be more than happy to send you that Webull tutorial video, but you got to email me and you got to let me know you opened the account and funded it. Like I said, that email address is down in the description box. Hit the thumbs up for me, guys. As you bounce out of here, if you'll do me a big favor, hit that thumbs up button. I really would appreciate it so that we can get the YouTube algorithm to get this content out to more people so we can help more people chase down that financial dream, financial freedom, that pot of gold at the end of the rainbow. We can help more people do that. So please hit the thumbs up for me. I appreciate y'all tonight. I know I went a little long. I know I'm gonna get some people down in the comments saying, well, why you gotta go so long? And I'm gonna tell them, just like I tell everybody else, hey, you ain't got to watch the whole time, man. Just boop, click out. I'm gonna stay on here as long as I want to because it's my channel. If you don't wanna be here that long, don't. Click out, right? So hit that thumbs up for me. Share the video as well. Do me that favor. If you don't mind, share it with somebody in your network. Share it with 5 people in your network. I know a lot of y'all do that because you email me and tell me, hey, I've shared this with my family members. I shared this with a coworker. I shared this with a friend. You know I appreciate you. Please continue to do that along with hitting the thumbs up for me. All right? Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.